Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. I'm Sumit Roy and I'm Senior Analyst here at ETF.com. Today I'm speaking with Matt Camuso, ETF Strategist at BNY Mellon Investment Management, which has $452 billion in assets under management. Matt, great to have you on the show.
Great to be here. Thanks for having us.
Absolutely. So I wanted to start off by talking about active ETFs, Matt. Obviously, we've seen very strong growth in terms of flows into active ETFs. Why are we seeing that, and what broader implications does that have for the investment landscape?
Yeah, and I actually think we're still in the early innings here of active ETF growth. If we actually look since 2019, we've actually seen active ETF flows increase year over year, as I think investors are just really starting to get comfortable and appreciate the benefits that active ETFs can bring to a portfolio. Most notably, it's tax efficiency, but it's also just the ease of use, right? So for active ETFs, you don't have any share classes. There's one price or one expense ratio that the investor pays. And really, if you look at kind of the structure of the tax efficiency compared with ease of use, for all different client types, large and small, you get access to the same manager at the same price. So because of that, I do think from an investment landscape perspective, you're actually going to continue to see more active ETF product come to market, where asset managers are going to choose to bring a strategy either solely through the active ETF, or you're going to continue to see the momentum and kind of trend we're seeing from a conversion standpoint from mutual fund to ETF. From a broader implication, I think the investor wins, right? So lower costs really across the board, as well as more tax efficiency in the broader portfolio.
That makes a lot of sense. So Matt, what are your expectations for ETF inflows? I know that this year active ETFs have taken their biggest share of inflows ever, but overall ETF inflows are down from 2022 and they're down from that record year in 2021. Where do we go from here?
Yeah, seen a little bit of a muted kind of flow number for this year, as you mentioned, relative to years past. I think that speaks to the market environment we're in. But I think broadly, we expect ETF inflows to continue, again, from a broad perspective and from an active ETF perspective. From a broad perspective, I would point to the increased adoption of fixed income ETF. Taxable bond ETFs have nearly doubled in terms of assets in the past 5 years. And I think that's just because you're starting to see investors, specifically institutional investors, really appreciate the operational efficiencies that the ETF wrapper brings, right? So you're looking at a market that historically was over-the-counter traded to now it's exchange traded, meaning with a click of a button, I can get broad, diversified exposure to really any segment of the fixed income market, rather than having to trade line item by line item from the over-the-counter perspective. So we expect that trend to continue, kind of raising assets broadly for the ETF industry. Specifically for active ETFs, I would point to really two drivers. More in the near term, because of the macroeconomic uncertainty we're seeing in markets, we're seeing investors really want active management as part of the overall asset allocation to help navigate the uncertainty. But also, if we just look at the amount of choice that's now available in the ETF industry, it's really fascinating to see that just this year through Q3, we've had 40 new entrants enter the ETF market. If we compare that to 5 years ago in 2018, there was only 9 new entrants into the ETF market. Even more interesting, I think, is of those 40, 34 of those new ETF issuers offer only active ETFs. So simply from the amount of choice, I think you continue to see this momentum and kind of build of assets in the active ETF space.